Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get into talking about markets and looking at the recap this week, I think there is one word that comes to mind, and it's volatility. It's been another crazy week on the livestock side of things.
Absolutely. It seems like these last few weeks, the roller coaster never ends. Unfortunately, it tends to end the week lower than it started the week, and that's not been good news across the board. When you look at where we've been this week, we'll start on the cattle side. Fed cattle cash market's down $5 for the week. On the futures side, we ended up down about $1.50 for the week, and I'll say that was a roller coaster with us actually showing some recovery in fed cattle futures early in the week, but certainly fell off as we went through the remainder of this week. On the feeder cattle side, we started 6 to 10 lower on feeder cattle, really driven by just what was happening on the fed cattle side as well. We did get a little strength as we got through the week, with maybe us actually showing on the plus side by the end of the week as light runs of calves, as we got rains in many parts of the country, kept demand good. Feeder cattle futures were also down 2.5 for the week, exhibiting very similar volatility to what we saw on the fed cattle side. When you look at the choice beef cutout, we were also down there as well this week, down $3.62, really down on all of the primals for the week. The choice beef cutout value was below a year ago levels this week for the first time since April 21st. So we know the direction we're heading when we look at what's been happening on the cattle side. When we turn and look at hogs, cash hogs down about $2.50 for the week. We also saw lower futures markets on the hog side as well. I think there's been a lot of concern about just what kind of supplies of hogs are coming here as we get in the latter part of 2017. When you talk about volatility, when you look at the pork cutout value, which was down $2.66, the makeup of that pork cutout value certainly showed a lot of volatility. Bellies, I'll call them down $11.26 for the week. But when you look at what happened on Friday, also down fairly hard again. Ribs also were higher for the week, helping offset some of those lower belly prices. We have seen similar kinds of declines in belly prices in a week's time. Perhaps we're starting to see a little bit of seasonality come into play on the belly side, with perhaps an end to what we might think of as some BLT season beginning to end. So it's been certainly a very volatile week on the pork product side.
As we talk about bellies and the loss, are markets losing? Are we losing interest in bacon?
Well, I'm not sure we're losing interest in bacon, but I think when you look at all of a sudden you put record prices of bacon in front of consumers or wholesalers or others, at some point we do make that switch towards other products, or we use a little less bacon, and perhaps that's a little bit of what we've been seeing of late. And as well, it's seasonally where we tend to see a little less demand on the bacon side. I think all of that's been at play. And again, you sit here with record high bacon prices in a period of time where we've got very large hog supplies coming. And I think some may be sitting on the sidelines going, I'm going to wait for some lower pork prices to come in front. And hopefully that'll mean bellies as well. We'll wait and see which side of that market wins at the end of the day. But we do know we have large runs of hogs coming in this last quarter, and lots of bacon also will be coming to market.
I think we have to talk specifically on the domestic demand side of things, and we're going to talk a lot about demand in general today. As we take a look at the domestic side, consumer confidence came out. How is that playing into the role and into what's going on in prices and demand?
Yeah, Megan, I always say, thank goodness we've had very strong domestic demand as we've gone through 2017. I think it's kept prices for all these meat products higher than otherwise would have been the case. And when we look at the preliminary August data that we got this week, the overall index of consumer sentiment's up 4.5% relative to a month ago. That's really good news. When we look at the components of that, I think it's always important to look at what's happening today in terms of that index versus expectations in the future. And the current economic situation was down 2.1% for August relative to a month ago level. However, when you look at the expectation side of that index, it was up 10.6% relative to a month ago. So in some ways, it might suggest to us that as we move forward, we're going to see demand strengthen even further for many of these meat products, which, again, given what's coming in terms of additional meat supplies to the market, I think that's nothing but good news. And when you see a overall index for August that's at the highest level since January of this year, it gives me a little bit of hope that we can continue to keep some stronger prices than otherwise might be the case.
Scott, as we talk about demand, we alluded to this last week. We were going to talk about the demand for high quality beef, and that is at record levels. When we take a look at that, is it surprising to see some of these numbers and the demand for that prime, or those really good cuts of beef so high right now?
Well, I think anybody that would have told you we would talk about a prime select spread exceeding $60 as we go through 2017, many of us might not have believed that would be achievable this year, yet we've done it. The prime select spread did fall a little bit this week, but still at near record levels at over $60 from prime to choice. You know, there was a period of time in 2012, a very short period of time, where we got above $50, but these kinds of spreads are really not what we normally think of. It just tells me what the demand for the highest quality of beef is out there. We do continue to supply additional high quality prime grade beef to the market, yet we continue to see the demand very strong. For me, I think this is a sign of some of the economic recovery that we have going on. Those with at the upper end of the income scale have also seen growth in incomes the last several months, and the ability to go out and eat more higher end steak products has certainly been part of that portfolio. So I sometimes like to pull us back to producers and say, you know, you and I talk a lot about what's happening in terms of how do I do price risk management. If we're going to talk about a $60 spread between prime and choice, that might be a price risk management strategy where you don't have to use futures or options or some other marketing tool to try to lock in prices. The quality grade and quality premiums available even back to live cattle for that very highest grade, I think, is a price risk management tool. Yet at the same time, you look at what's been happening to the choice select spread, and it has seasonally moved lower after hitting a peak at over $20 between the choice select spread. You know, we're back below 10 here of late. So it's been a phenomenal difference between the choice select spread that's narrowed substantially since its peak in mid-June versus a prime choice spread that has just continued to accelerate over that same period of time. It ought to tell cattle producers a lot about, I don't think we can continue to look forward and say beef is beef. There's going to be a quality difference that's available for those that want to go capture those higher quality cattle.
So maybe the option for risk management isn't necessarily on the price side, making an investment and growing and developing our genetics.
Exactly, Megan. And I think all the time I get producers who I will say they're wonderful at managing production risk management, i.e., how do I reduce death loss? How do I do things in my herd that helps me with feed efficiency? I go, this is just another option, right? We can use genetics to increase the likelihood of higher quality beef being produced. So something that they're probably really much better at than using futures and options to trying to lock in price risk management. So there are other ways to do some of this price risk management without maybe using the tools they're not so comfortable with.
Scott, as we take a look at the demand aspect of things, retail prices were released last week. Are we seeing a shift at the grocery store with what producer or what consumers are purchasing as we see price differentials at the grocery store?
Well, I certainly think consumers have seen something a lot different when they've headed to the meat case this year when you look at beef versus pork versus chicken. And I think that is important as well to what's been happening on the consumption side of the equation. We can look at BLS data that for sirloin, choice sirloin steak started the year at $7.79 in January. And the August data we got out last week said those climbed to $8.36. So fairly large increase in terms of retail beef prices consumers are seeing at the meat case. Yeah, when you look at pork, we started with a boneless pork chop at 373 in January. It did increase, but only 10 cents to 382 by July of this year. Yet when you look at the chicken side, we started at 322 and we're setting in August at 319. So I do think there was some price substitution going on. I sometimes am a little hesitant to say too much about those BLS price series. I think they're better than they were in the past, but oftentimes we miss some of the specialing that goes on. And that may be where on the beef side, we've seen some buy one, get one free or other types of specials running that maybe doesn't get picked up in our official data. That may mute a little bit some of the price strength that we see on that beef side. But I do think some substitution away, and certainly when you're talking about lower quality beef, I think pork and chicken are better substitutes for lower choice and select beef products relative to there's not very good substitutes once you get in that upper 2/3 choice or prime level on the beef side.
Let's switch from talking about domestic demand to global demand and exports. For the first time in 25 years, U.S. pork has unfettered access to Argentina. Really a big move and announcement this week from the Trump administration. Argentina is a pretty big pork consuming country. How much impact can this have on U.S. and for U.S. pork producers?
Yeah, so I think it'll take just a little bit of time before we finally start to see some product moving to Argentina from the United States, but hopefully we can get everything formalized here by the end of the year and start to see some product flow. When you look at that Argentine market today, I will say it seems like the Brazilians have been capturing much of the trade of pork into Argentina. If you look back over the last few years, I think that's about a $10 million market for them. I expect that we're going to be able to capture a larger and larger portion of what the Brazilians once had. And I think that's positive for us. And I will just keep saying we need to keep exporting more pork out of the United States. And we talk about the traditional countries that are growing. It's nice to find new countries to add to the mix. And Argentina, I think, can certainly help us as we look ahead the next few years. And hopefully we can start talking about a market that add somewhere close to $10 million a year to overall pork sales.
And if you look at some of those other countries that basically that don't take U.S. pork for those non-science-based trade restrictions, I think India, Thailand are two other larger countries that we'd love to get U.S. pork into as well. So maybe we still look at those, and I know that that's one area U.S. pork producers are looking to the administration to push for as well.
Yeah, absolutely. I mean, you can take this case of here in the U.S., we don't get a lot of growth in terms of per capita pork consumption, at this point. And so we tend to find markets that become more saturated over time. And I think even with our traditional large growth export markets, if those slow down as they become more saturated, we have to keep looking for those that are really, frankly, keeping our product out, whether it's a non-tariff barrier or otherwise. Those are the kinds of things that we need to continue to work on if we're going to see growth long-term in U.S. pork exports.
Speaking of countries that play a large role in our trading partners, NAFTA 2.0 discussions, U.S. agriculture's voice and message really has been the same: do no harm, as we continue those renegotiations or those renegotiations get underway. Where do we go from here? How does the livestock sector protect itself?
Yeah, I think we have to be very vigilant as these negotiations are going on. I think when you look at Secretary Perdue's efforts in this area, he certainly has heard loud and clear what U.S. pork and beef producers have said about, in fact, let's do no harm. And we might see some opportunities for some growth. You can look north to Canada, for example, and maybe see some opportunities in some of these markets for U.S. products to grow. But we're going to have to watch very carefully as we move forward to make certain that we don't see anything that tends to harm where we go at this point. But the message has been sent, I think, very loud and clear to administration that we are paying attention, and we do want to make certain that we don't lose out relative to where we are today. And I will remind us, when we think about the original NAFTA negotiation, there was a lot of discussion about overall economic growth that might occur in Mexico as a result of a successful NAFTA negotiation. I wouldn't be surprised for us to go through 2.0 here and also find an opportunity for the Mexican economy to grow even stronger than maybe we would think otherwise. And stronger economic growth probably means more meat consumption, all else equal. So there might be some indirect spillover effects as well that could be helpful to U.S. meat trade.
Anything else this week?
I think we've covered the majority of things. It's been, despite a lot of volatility, not a lot of big news week for us when we look at livestock markets.
But there's will be plenty to talk about next week. Cattle on feed, livestock slaughter, and cold storage numbers come out. Anything in particular we're paying attention to and looking for in those reports?
Well, I think you can see storage on Tuesday. Just whether or not we're seeing any kind of buildup in freezers of beef or pork will continue to kind of start the week for us. And as I think we get to Friday again, we're going to look at another cattle on feed and talk about what placements have done yet again for this month. And we'll see how strong a placements we had relative to a year ago. But we'll set the stage yet again for just what kind of numbers of cattle we're going to be talking about as we move ahead.
Looking forward to our discussion then. Have a great weekend. We'll talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com, click subscribe, and you can also submit questions and comments there. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.